Right, let's get to German reinsurance giant Munich Re, which has posted a 44% jump in third quarter net profit and confirmed its guidance for the year despite the impact from claims relating to Hurricane Ian. Christoph Jurecka is the CFO of Munich Re. Christoph, a real pleasure to see you today, sir. Well, just how tough is it out there? The numbers look good, but it just seems that there's a lot of influencing factors which are worrying many on the horizon.
Well, first of all, good morning. It's a pleasure to be with you, and well, it's a sunny good morning in Munich. So I think this is a signal already. We are looking at very good results. 530 million of net result, despite the fact that we are in difficult times. We had the Hurricane Ian, as you mentioned, but also macroeconomically, we think difficult times. As you know, COVID is not over yet. So there's a number of reasons why we can be very pleased with our result. The drivers behind, what are they? Well, in P&C reinsurance, obviously we have been suffering from large losses, particularly Ian. But then I'm very happy that life and health reinsurance, as well as our primary insurance business at ERGO, were able to compensate to a significant extent. And then finally, we had a very strong FX result. And there we are, still on track to achieve our full-year target and a very pleasing result for Q4.
And I think one thing that seems clear to me from my friends in the insurance industry, Christoph, is that thank goodness money has been repriced because it's taken the tourists out of your sector and you can finally get premiums that react to events as well. It looks from what you're saying about gross premium guidance as well, that is the case for your company.
But obviously, yes, of course. I mean, it has been a long time that we have been in a so-called soft market. The markets have been hardening for quite some time already, but only very recently, I think we dare to say we are back in a so-called hard market, where we get a price for the risk which we think is adequate. And this is obviously the right time to grow our franchise, to grow our business. And frankly, what we see is a flight to quality. So more and more of our clients are really looking at the high quality reinsurer, the most solid ones, the one with best capital. And there we're perfectly well positioned this morning.
Christoph, let me just pick up on Hurricane Ian in terms of the average expenditure for natural catastrophes. We saw losses here of 1.6 billion euros. What's the modelling internally look like when it comes to natural catastrophes, given we've got climate change impacting the globe?
Yeah, first of all, I mean, Ian is a real disaster, and you know, our hearts is with the victims, and it's so sad to see all those pictures on TV. Ian has been one of the most powerful storms to ever hit the United States. It accounted for an insured market loss with a broad range, but I think around $60 billion US. That's our current estimate, preliminary, of course. So that's significant. And so what we can do as an insurer is, of course, to make sure that all our models, they capture the effects of climate change to the best possible extent. We include newest scientific research into our models as soon as they are available. So we do whatever we can, but finally then, a lot of the risk is still a stochastic risk, so something we cannot really predict well enough. And therefore, this volatility is inherent to our business. And what is then important is that we are diversified well enough across the various businesses we are having, and even in difficult quarters like this Q3, are making enough money to come up with a reasonable group return on equity, like we did this Q3.